Good morning. Thank you for joining this morning's webinar. We're going to go over your questions here on the live chat, and then we're also going to cover a few topics here this morning. We're going to talk about the SEP IRA versus the solo 401k plan, and you're going to see how the solo 401k plan has the advantage by far over the SEP IRA for many reasons, which we'll cover. We will also talk about the $1,500 auto contribution credit, which is available to solo 401k plans, but not SEP IRAs or any type of IRA. And then, of course, we'll go over your questions. Keep in mind that today's presentation is for educational purposes. We're not providing investment advice. We don't sell investments, and we're not providing legal advice. As always, you can follow the conversation on our community, which is mysolo401k.net/my community. We also have forums there, so that would be /forums. There's also a full library of videos there, hundreds of blog posts, guest blog posts there as well from professionals in the industry covering all sorts of topics, whether it's IRAs or solo 401k plans to life planning or trust planning, estate planning, retirement planning. So it's a very good resource and it's free to join. You don't have to be a client to join our community. Here's a link to that community. We also have an artificial intelligence section. Let me send that over for solo 401ks, IRAs, and even rollover business startup 401k financing type of plans. From a eligibility perspective, you can open a self-directed solo 401k if you're self-employed and not employ any full-time W-2 employees that are working 1,000 hours or more who are not owners in the business. Your spouse can also participate in the plan if he or she is also working in the business, and therefore the spouse can also make contributions to the plan. Now, some of the features about the self-directed solo 401k offered by my solo 401k financial is that it comes with checkbook control / wire control, meaning that not only can you invest in traditional investments such as equities, but you can also invest in self-directed alternative investments like cryptocurrency, real estate, precious metals, promissory notes, real estate syndicates, and the list goes on and on. If you are eligible for a solo 401k plan, you would complete our online application on our website. Let me send over that link to the open account page. And this slide's a good example of a one participant plan where just one person is participating in the plan. This person would have a total of 3 separate holding accounts, also known as brokerage accounts or bank accounts, to hold their different source of solo 401k funds, which are pre-tax solo 401k funds, Roth solo 401k funds, and the final one being voluntary after-tax solo 401k funds. So if you're going to utilize all 3 buckets, which oftentimes they are utilized, especially if you're transferring an IRA or a former employer plan to the solo 401k, and those are pre-tax funds, those would get transferred to the pre-tax solo 401k. Also, the plan is already built to allow for all these contribution types, so you don't have to open all the holding accounts at once. You can open some initially, and the others can be opened later. You're not going to lose that ability, in other words, to still make these types of contributions. Here's an example of a 2-participant plan. Let's say that your spouse also wants to participate in the plan. Therefore, it would still require separate holding accounts under the solo 401k plan to hold each participant's funds. That's why in this slide, you're going to see that a total of 6 holding accounts, that is brokerage accounts, bank accounts, will need to be opened. 3 for each participant, where they're going to utilize the pre-tax bucket, the Roth solo 401k bucket, and the voluntary after-tax solo 401k bucket. And we would help you get these opened up, whether it's at your local bank, credit union, or at a brokerage firm such as Fidelity that will provide a checkbook brokerage account for a solo 401k offered by my solo 401k financial. Same thing with Schwab, to name another brokerage firm. Another one is Altruist. Some of our institutional clients will use Altruist, which is another brokerage firm. All right, let's switch gears and talk about the solo 401k versus the SEP IRA. We get these types of questions quite often, so we're going to go over that today. And this chart here is a good comparison chart. So obviously on the left, we got solo 401k. On the right, we've got the SEP IRA. You're going to see that the Mega Backdoor Roth is only available in the solo 401k plan. So a SEP IRA does not allow for the Mega Backdoor. So the Mega Backdoor is where you make a contribution to the voluntary after-tax solo 401k plan, where you can contribute the overall limit, which is $70,000 for 2025, to the voluntary after-tax solo 401k, and immediately convert it to the Roth IRA or the Roth solo 401k. A second difference is the loan option. With the solo 401k, you can process a solo 401k participant loan where you can borrow 50% of the solo 401k balance, not to exceed $50,000. Unfortunately, you cannot borrow from any type of IRA, whether it's a SEP IRA, traditional IRA, or a simple IRA. I just sent over a link to our solo 401k participant loan page. Moving on with the other features here. With the solo 401k, you can invest in alternative investments via checkbook directly from the solo 401k plan. With the SEP IRA, in order to get checkbook control, in order to gain checkbook control of your SEP IRA, you're going to have to open up what's referred to as a SEP IRA LLC, where you set up a single member LLC where the SEP IRA is the sole member. The SEP IRA gets invested in that LLC, and then you place investments through the LLC. Well, with the solo 401k, you gain checkbook control directly. So that's a big one, especially if you're looking to invest in alternative investments such as real estate, for instance. And of course, there's the $1,500 auto contribution credit. That's available to a solo 401k plan, and it is not available to SEP IRAs. We're going to talk more about this big advantage, because the $1,500 auto contribution credit does not require that you make contributions to the solo 401k to qualify, which you're going to learn when we go over those slides in a little bit. And it's available immediately, and it's a dollar for dollar credit as well. And then we've got, of course, employee deferrals. With the solo 401k, you can make employee contributions, whereas a SEP IRA only consists of employer contributions. So that's another big key difference. And that's why oftentimes it takes less income to maximize your contributions when you utilize a solo 401k plan versus a SEP IRA, because of that employee contribution addition. So with the solo 401k, not only can you make the profit sharing contribution, also known as the employer contribution, but you can also make employee contributions. So that's really where the big difference from a contribution perspective lies. When you compare a solo 401k to a SEP IRA, with the SEP IRA only allowing for employer contributions, not employee contributions. So those are the key differences there between the solo 401k and the SEP IRA. And these are actually big differences. There might be a few other ones, but they're not as impactful as these here. So I know that with the passage of Secure 2.0, the Act, Secure 2.0 Act, that there were a lot of changes that were made, not only to solo 401k plans, but also to SEP IRAs, whereby the SEP IRA, now you can make Roth SEP IRA contributions. Even with that addition, the solo 401k is still better than the SEP IRA. And here's one reason. The first reason, as I touched on a little bit earlier, is that you need less earned income in order to maximize your Roth contributions when you use a Roth solo 401k instead of the Roth SEP IRA. So that's a big one, especially not only from a Roth contribution, but when you take into account the mega backdoor, the voluntary after-tax contribution, where you make that voluntary after-tax contribution to the solo 401k bucket, and then you immediately convert that to the Roth solo 401k or the Roth IRA. Here's an example regarding the less income. So Jane is self-employed under an S corporation. For 2025, she pays herself a total of $70,000 in W-2 wages from her S corp. She can choose to contribute the full $70,000 of those W-2 wages as a voluntary after-tax contribution. So that would flow into the voluntary after-tax solo 401k bucket, and from there it would get converted to the Roth solo 401k bucket. If instead she made a Roth SEP IRA contribution, because a SEP only allows for employer contributions, she could only do 25% of that $70,000 as a Roth SEP IRA contribution, which is $17,500. So that there is a great illustration as to how you can get a lot more money, specifically Roth funds, if you use the Roth solo 401k in conjunction with our mega backdoor Roth solo 401k. Here's a second example, assuming the same example as above, where but in this scenario, Jane pays herself $100,000. So instead of $70,000, she receives $70,000 in W-2 wages from her self-employed S corporation. Here, under this scenario, she's still only going to be able to contribute she's going to be able to contribute solely $25,000 of Roth SEP IRA contributions, because 25% of $100,000 is $25,000. Whereas with the Roth solo 401k, she could do the voluntary after-tax contribution of $70,000 and then immediately convert that to the Roth solo 401k plan. So however you cut it, it's going to be best to use the solo 401k plan if you're trying to maximize Roth contributions. Here are some other reasons why the solo 401k is better than the SEP IRA. So a solo 401k allows for participant loans, whereas a SEP IRA does not allow for loans. If you take a loan from your SEP IRA, it's going to be deemed a taxable distribution. The third reason is when you're investing in real estate. So as I mentioned earlier, many of our clients open a self-directed solo 401k with us because they want to invest not only in traditional investments like equities, which our plan also allows for, but also alternative investments like real estate, whether it's commercial real estate or family homes. Well, many of our clients will utilize unrelated debt finance income financing. So they'll get a non-recourse loan. The non-recourse loan is to the solo 401k plan, and that's how the solo 401k plan obtains more funds to be able to purchase that property with less solo 401k funds. So if a SEP IRA gets a non-recourse loan, that's going to trigger that unrelated debt finance income tax, which is typically taxed at the trust tax levels, which can be as high as 38%. Well, that tax does not apply when a solo 401k utilizes a non-recourse loan for investing in real estate, physical real estate, for example. So that's another huge difference. Okay, let's shift gears over to the auto contribution credit that I talked about earlier, which applies to the solo 401k plan, but does not apply to the SEP IRA. So one, it's a dollar for dollar credit, and it's equal to $500 per year for a total of $1,500 over a 3-year period. So if you open a solo 401k plan this year, this would be the first year you would qualify for it. Likewise, if you are an existing solo 401k client and you open the plan with this prior to this feature being available, which would have been prior to December of 2023, we can add this to your plan. Your plan would need to be amended to allow for this auto contribution credit, and you can start utilizing that credit here in 2025 as well over the next 3 years in $500 increments for a total of $1,500. If you're an existing client and you need to have this auto contribution credit added to your plan, then I'm going to shoot over a link to our support ticket. You can submit a support ticket, and then we can get that added to your plan. Of course, not all solo 401k plans out there allow for this auto contribution credit. For example, solo 401k plans offered by Fidelity, Chase, Schwab, T. Rowe Price, and the like do not allow for this type of auto contribution credit. They have not incorporated it into their plan documents like we have. And again, it's a dollar for dollar credit, which means it reduces your business taxable income dollar for dollar. And keep in mind that once this auto contribution credit is added to your plan, you're not required to contribute to the plan in order to take advantage of this $500 per year auto contribution credit for the next 3 years. Or you can decide to make contributions in whichever amounts you want. So in short, you're not required to make contributions in order to qualify for this auto contribution credit. To claim that $500 auto contribution credit each year for the next 3 years, you're going to have to file Form 8881 each year, and we can provide you with a sample PowerPoint and video on how to do that, on how to prepare and file that form, which you would do so with your CPA. And again, it's $500 for 3 years for a total of $1,500. Here's a good resource where you can find out more about the solo 401k auto contribution credit. I'm also going to send over a link to a page that goes over the solo 401k auto contribution credit versus a tax credit, because there's a difference between the two, and the solo 401k plan only qualifies for the solo 401k auto contribution credit. Here's a link to a good post that goes over the two. I'm going to shoot that over now and take a look at that. This chart here does a good example of someone who opens up a solo 401k plan, or excuse me, someone that's an existing client and they open the plan with us prior to December of 2023, where the auto contribution credit needs to be added. So this would be added here in 2025. So you would qualify for 2025, 2026, and 2027. The same slide can also be utilized for someone who has an existing solo 401k plan at Fidelity or Schwab or a competitor's firm, and they want to transfer it to our plan. Your plan would be would qualify once it gets converted to our plan. It would also qualify for the auto contribution credit for the next 3 years. So you can also sign up for the solo 401k plan by the end of the year, and you would qualify as well for that solo 401k contribution credit starting in 2025. it would be in $500 increments for the next 3 years. So when you utilize a solo 401k plan from my solo 401k financial, we'll also take care of compliance reporting for the plan. And that's all covered in our annual fee of $125. Compliance reporting encompasses Form 1099-R reporting, which applies once you process a distribution from the solo 401k or process a conversion. For example, the Mega Backdoor Roth Solo 401k conversion requires the issuance of a Form 1099-R, even though the conversion is not taxable if you convert the funds immediately. So if you timely request that Form 1099-R, we'll go ahead and take care of that. It gets filed electronically with the government with a copy provided to you for filing with your personal Form 1040 tax return. Also, other reporting items include the Form 5500 Easy, which applies once the fair market value of the solo 401k plan is greater than $250,000. So that means that you have to add all the funds in the plan, including all participants' funds in the plan, to determine if that $250,000 threshold has been met. If so, then a 5500 Easy needs to be filed with the government, generally by July 31st of the year following, in which the value of the solo 401k plan was greater than $250,000. So for example, if the value of your solo, the market value of your solo 401k plan is it's greater than $250,000 as of December 31st, or was as greater than $250,000 as of December 31st of 2024, then a Form 5500 Easy will need to be filed with the IRS by this July 31st, and we prepare that and file it electronically with the government for you, as long as you timely request that. It's important to note that we don't have access to your funds, so you need to make sure you communicate to us as the trustee of the plan when you need this type of reporting, which we include at no additional fee, or you can have your CPA handle it. But it's good to know that we'll take care of that as long as you timely request it, and we don't charge any additional fees for those type of services. We'll also assist with transferring IRAs, former employer plans to the solo 401k if you're a new client or an existing client. And again, I've already touched on this. The solo 401k that we offer comes with that $1,500 auto contribution credit for new clients. If you're an existing client from prior to December of 2023, we would need to add this auto contribution credit to your plan. Our annual fees are flat, that's $125. Our plan also allows for participant loans. So we would prepare those solo 401k participant loans and no documents and no additional fee. Anytime you want to borrow from the solo 401k plan, specific loan documents have to be drafted pursuant to the IRS regulations. Okay, so those are some of the features there, and that concludes what I wanted to go over with today. Now let's look at some of your questions here. All right, we got a question here from Tim. Regarding my pre-tax non-custodial account reporting, is there anything my solo 401k financial does or anything I communicate to my solo 401k financial when I contribute to my pre-tax 401k account? I just need to fill out an IRS 1040, line 28, question mark. So from a contribution reporting perspective, there's nothing that needs to be reported to my solo 401k financial. Instead, those contributions flow directly into the solo 401k holding accounts, and then you're going to report those contributions on your business tax return, which is going to depend on how your self-employed business is taxed. So if your self-employed business is taxed as a sole proprietorship, then yes, it's going to be reported on your personal tax return. I'm going to send over a link right now to a page on our website that goes over how to report contributions on your tax return. So in sum, contributions are not reported to us. They're instead reported on your business tax return or personal tax return, depending on how on the type of self-employed business you have. So there's a link I just shared there with you. It has good charts on how to report each contribution type. Let's see. Here's a good question. Can we have both a SEP IRA and a solo 401k? You can. However, you have to aggregate your contributions between the two. So you cannot go over the overall contribution limit, which is 70,000 for 2025 between the two. So yes, you can contribute to both. Let's see here. Here's another question here. After I notify my solo 401k financial, when can I typically expect the Form 1099-R for a after-tax conversion to the Roth solo 401k? So we will issue that Form 1099-R by February of each year. So anyone that converted voluntary after-tax solo 401k funds or even took a distribution last year or did a pre-tax conversion in 2024, we are in the process of issuing those Form 1099-Rs as we speak, and they'll be finished being issued by February. And we'll file a copy with the government, and then we'll email you a download link where you can download a copy for your records and to include with your personal tax return. So make sure that you completed the applicable distribution or conversion form on our website, depending on exactly whether you took a distribution or process a conversion. And typically we want those form that requests submitted to us by the end of the year, but we understand sometimes it may not get submitted till January or February to us, but so that way we can timely file that. So you can go to our forms tab if you have not yet completed the conversion online form to request that 1099-R for 2024. Okay, let's see here. Looks like we got a question here, another question. If I previously made both Roth and traditional contributions to my last W-2 401k, how would the transfer to the solo 401k work? Would I either need to convert to my Roth into traditional or vice versa? So if you have an existing solo 401k plan with us or you're going to open one with us, then you can transfer a former employer Roth 401k as well as former employer pre-tax 401k funds to the solo 401k. So the solo 401k that we offer allows for pre-tax funds, Roth funds, and voluntary after-tax funds. Here's a slide I was showing earlier that has an example of those three buckets. I can't figure out how to get rid of this so you can see it, but there it is. See those three buckets there? So your former employer Roth 401k would get transferred to the Roth solo 401k bucket. The former employer pre-tax 401k would get transferred to the pre-tax solo 401k bucket. So that's how it would be done. So yes, the solo 401k plan is great for consolidating both former employer Roth 401k funds and former employer pre-tax 401k funds, as well as other types of retirement plans such as 403bs, 457, thrift savings plans, defined benefit plans as well. Let's see here. Let's check out some more questions here. All right, so you signed up for a solo 401k with my solo 401k financial. You used E-Trade for the brokerage accounts. They took 2 to 3 weeks. Yeah, I'm not surprised to hear that E-Trade moves very slowly with respect to opening up the brokerage accounts. That's why many times our clients will skip using E-Trade and they'll use Fidelity or Schwab But some clients, and understandably, will still use E-Trade for the brokerage accounts, especially if they have an existing solo 401k at E-Trade that has securities and they want to restate it over and move everything within E-Trade. But yes, ever since they merged with, I think it was Morgan Stanley, they've been very tough to work with regards to opening up brokerage accounts there. All right, so got Tim here. I love what you do. What's the best way to reach you? Best way to reach us is by submitting a support ticket by our support page. You can also schedule a call to speak to one of our compliance professionals. You can also join daily webinars. You can also email us. You can also post in our community. So we have a lot of open lines of communication. Okay, here's another question here. If I am older than 55, can the catch-up funds also be deposited directly into the after-tax bucket and converted to the Mega Backdoor Roth Solo 401k? I'm glad you brought this question. Because I'm glad you asked this question, because catch-up contributions can never be contributed to the voluntary after-tax Solo 401k bucket. Instead, it can be contributed directly to the Roth Solo 401k bucket. If you're trying to make it if you're trying to have it count as a Roth, it's got to go directly into the Roth Solo 401k bucket. Of course, you can also make the catch-up contribution to the pre-tax bucket if you don't want to treat it as a Roth. But you can never contribute that voluntary after-tax Solo 401k contribution to the after-tax bucket. It's got to go directly to the Roth Solo 401k bucket if you want it to count as a Roth Solo 401k contribution. Let's see here. Here's another question here. I noticed that my solo 401k financial only requires me to notify them once my account is greater than 250,000 for filing Form 5500 Easy. Does my solo 401k financial send that form to the IRS and me? Does the IRS only require the 5500 Easy once, or does my solo 401k financial do this IRS annually? So number one, the Form 5500 Easy is prepared by us for those who timely request it. We then assign it to you for signature through the government website, where you'll be able to sign it electronically, and then we'll submit it to the government electronically. So it's a very streamlined process. So yes, you need to make sure you let us know once the market value of your solo 401k is greater than 250,000, so that we can prepare that 5500 Easy for your signature, and then we'll file it electronically with the government. And that Form 5500 Easy needs to continue to be filed each year for as long as the market value of your solo 401k plan is greater than $250,000. And generally, we'll go ahead and file that form for you on an annual basis once we know that it needs to be filed. But technically, you should still let us know by filling out our request form to prepare it. We probably prepare over 7,000 of these each year, so it's quite a bit. Okay. Let's see here. Here's a question here. Where do we go to obtain and replay the information that you are sharing for filing depending on our entity? Well, you can always listen to this webinar. You can also take a look at the link that I sent over earlier that talks about how to report contributions. Let me send that over to you again. And then so there it is. Also, we have recorded webinars on our website for each contribution, for each entity type, that goes over how to report contributions. Let me send those links over now. So we've got great resources on our website, not only videos, but infographics, There's one there for sole proprietor. Let me send one over for a corporation and then a partnership. Here's the one specific page for partnership. These are all on our website. You can search our website for it. We also have the artificial intelligence page on our website. You can ask the artificial intelligence and it'll bring up that page for you. So we have all kinds, we got all the bases covered here. Here's one for corporations, including S corporations. I can go on all day long, providing all kinds of resources. So there's that. And then let me send you the artificial intelligence section of our website, which is, the domain is www.solo401k.ai. So there's that. Let's see what other questions we have out here today. Let's see here. One moment here. Let's see what we have here. Let's look for some more questions here. Here we go. I'm thinking about opening an E-Trade account. Once I have it open, if I decide to work with you guys, how simple would it be to connect my E-Trade account with your plan? So yes, many of our clients will do that. They'll start off with the vanilla solo 401k at a brokerage firm like E-Trade, and then later they'll convert it. That's called a restatement. They'll restate it over to our solo 401k plan. And let me send over a link specifically to E-Trade. So the way it would work is we would then help you open up a new plan with us. And then if you want to use E-Trade for the brokerage accounts, we would help you open up new brokerage accounts at E-Trade, because E-Trade would not allow you to use the existing brokerage accounts for the solo 401k that you would open with them, because that's for their solo 401k. But they will provide brokerage accounts for the solo 401k offered by my solo 401k financial. So we would prepare those for you, fax them to E-Trade. Then we would prepare an internal transfer form to have E-Trade transfer those existing E-Trade securities and cash over to the new solo 401k brokerage accounts provided by our company. I'm trying to find the E-Trade link here that I can send to you that covers the whole restatement process, specifically applicable to E-Trade. And here it is. Let's share this with you. From a timing perspective, we turn around all the plan documents and brokerage account forms rather quickly. The plan document forms are typically provided the same day. The brokerage forms are usually provided the next day or a couple days later. It just depends how quickly you respond to the next steps. Then they get faxed to E-Trade, and then the ball's on E-Trade's court. As I mentioned earlier, E-Trade takes a while to open up the brokerage accounts. It can be up to a month. So be prepared for that. I just sent over the link specifically to restating a solo 401k at E-Trade. There it is right there. We also have similar pages on our website for Fidelity and Schwab as well. Okay, let's see here. What other questions we have? A lot of good questions today. We appreciate it. Keep in mind, we're going to have another one of these today at 1 p.m. Pacific time, another live webinar. We do 2 of these a day. One here at 10 a.m. Pacific time, like we're doing now, and then one later at 1 p.m. Pacific time. So if we don't get to all your questions, you can always join then. Let's see what other questions we have. Here's a question here. If you pay yourself $23,000 in wages under an S Corp, are you required to make employee contributions before being able to make employer contributions? When doing employer contributions, are you able to write off the same on the S Corp return? I believe the business would have to issue 1099 to the employee, or is this incorrect? So that's a good contribution question when we're talking about an S corporation. So number one, in order to contribute to the solo 401k plan up to the overall limit, you're going to have enough box one W-2 wages. So you cannot contribute more than you make in W-2 wages from your self-employed business. So if you pay yourself $23,000 of W-2 wages, and if we're talking about 2024 numbers here, which appears to be the case, then for 2024, the employee contribution limit is $23,000. So if you contribute that entire $23,000 as an employee contribution, then you will have used all of your W-2 wages to contribute. So you're not going to be able to contribute any more, whether it's a voluntary after-tax contribution or an employer profit-sharing contributions, because all contribution types are going to be based on your W-2 wages if it's an S corporation and you issue a W-2. So S corporations typically issue a W-2 if you're the owner in that S corporation. So you're not going to be able to contribute any type of employer contribution. Now, instead of making an employee contribution, you could do an employer contribution. So it would be 25% of 23,000, whatever that is. And then the difference up to 23,000, you can apply as an employee contribution, but you're not going to be able to get over that $23,000 limit if you only pay yourself $23,000. Now, employer contributions are reported on the Form 1120S if we're talking about a S corporation, whereas employee contributions, those are reported on your W-2, or they can be reported on Schedule 1, which is an attachment to Form 1040. Again, I sent over a link earlier to how to report contributions based on each entity type. And there's some good charts there that breaks down how to report each contribution type. So I can't stress enough that you should look at that link there, because that does a great job of how those contributions are reported. Let me try to bring that link up again here, so that I've actually shared it a couple times already. But let me share it again. Third time is a charm. So here it is. Take a look at that. It's a very useful one. Again, it's got charts that gives you line by line how to report those contributions. Okay, let's move on to another question here. Well, here's a good question here. Why only if I convert our solo 401k to your solo 401k can we claim the tax credit? Why want to work with any other providers? Great question. So number one, it's not a tax credit. It's called an auto contribution credit. So there's a difference between the two. So I'm not trying to split hairs, but there's a major difference. And I sent over a link earlier that talks about there's a post that we did that compares the tax credit versus the auto contribution credit. Solo 401k plans do not qualify for tax credits. They qualify for auto contribution credits. And the reason why someone like E-Trade or Fidelity does not provide a solo 401k plan that offers the auto contribution credit is probably because they haven't updated their plan documents in order to allow for it. Because your plan documents is what drives what you can do. It's got all the regulations. So maybe they're going to add it eventually, but ultimately that's a great question for Fidelity. It sounds like we're ahead of the curve over Fidelity and Schwab, which is not out of the ordinary when you're dealing with a boutique firm instead of a 500-pound gorilla. You've got less red tape to cut through when you work with someone like us. Okay, let's move on here. So, let's see here. Here's another question here. So the W-2 formula, employer formula does not apply if we have an S corp and contribute 70,000 in after-tax bucket. You're exactly right. That's what's great about the voluntary after-tax solo 401k bucket, is that you can do a dollar for dollar contribution. So if we're talking about 2025 contribution numbers and you're an S corp and you report 70,000 of box 1 W-2 wages, you're going to be able to contribute that entire $70,000 to the voluntary after-tax solo 401k bucket and then convert it to the Roth solo 401k. So you just need to pay yourself $70,000 in order to do that whole mega backdoor contribution, which is dollar for dollar. Okay, here's another follow-up question. So if I do not open an E-Trade account but go directly with you guys, how much faster would the process be? Well, by going through us, you would open the solo 401k plan for the first time, which means it would come with that auto contribution credit. Second, we can help you use Fidelity for the solo 401k brokerage accounts. That way you can easily get them opened, and we can go ahead and help you get those brokerage accounts opened up online directly with Fidelity. So you're not going to have to fax or mail any brokerage forms to Fidelity. You'll be able to open those online with Fidelity, and you can open up a total of 3 brokerage accounts, pre-tax, Roth, and after-tax. Or if we're talking about both spouses in the plan, it would be a total of 6 brokerage accounts, and those can all be done at Fidelity. And I'm mentioning Fidelity because they will provide brokerage accounts for the self-directed solo 401k that we offer. They refer to them as investment-only / non-prototype brokerage accounts. And they'll gladly do that because they know we're the ones that are responsible for the plan updates with the government, not them. And then we're the ones that will be assisting you with the opening and the transferring of funds, as well as any type of reporting going forward from Form 5500 Easy to 1099R to the required IRS plan updates. And if you use Fidelity Brokerage Firm and you timely respond to our steps during the opening process, the brokerage accounts along with the plan can be opened in a matter of 5 days, business days, maybe even less. So it happens quickly. Okay, so what other questions do we have here? My wife is an LLC sole proprietor with a 1 participant plan with the typical 3 holding accounts, my solo 401k financial accounts. We are considering making, sorry, my screen keeps changing here. Making employee, you are considering making the spouse, the husband, an owner. But the husband currently maxes out a 457 plan. So of 23,500 in 2025, age 45. If I was made an owner or an employee of wife's solo proprietor, could husband have both a 457 and a solo 401k? What would be the contribution? So yes, you can participate in multiple retirement plans. So you might have a daytime job retirement plan, whether it's a 457B or a thrift savings plan, or a traditional 401k plan. So you're allowed to contribute to both. Of course, in your situation, in order for you to participate in the existing solo 401k plan, you're going to have to be working for that self-employed business as well. You don't have to be an owner. What is more, you cannot own any other businesses yourself that employ full-time W-2 employees, because that would result in the violation of the control group regulations. And if you're doing mega backdoor Roth solo 401k contributions to the solo 401k plan, it's not going to matter whether or not you already maximize your contributions to your 457 plan, or if you have a former employer 401k or a thrift savings plan. That's not going to matter from a contribution perspective, because voluntary after-tax solo 401k contributions are not impacted by contributions that you make to your daytime employer plan. So if we're talking about 2025, and if you get at least 70,000 of net self-employment income, and assuming your the LLC is taxed as an S corporation, you would only need to pay yourself $70,000 in W-2 wages, and then you're going to be able to contribute that full $70,000 to the voluntary after-tax solo 401k, and then convert it to the Roth solo 401k, or even convert it to a Roth IRA. Let me find a page here that has some good information regarding contributing to multiple retirement plans. Let's see if I can dig that up here. Where is it at? Give me one moment here. I cannot locate it all of a sudden here, but we have a good page on that. I just can't locate it here, but it's on our website. There's a good contribution page regarding contributing to multiple retirement plans. Now, I'm going to say one last thing here, which is what we refer to as the 457B exception. So even if you max out your contributions to your 457B, and let's say you want to make employee contributions only to the plan, to the solo 401k plan, you can still do that $23,500 as long as you pay yourself at least $23,500 in W-2 wages, even if you've already maximized your employee contributions to your 457 plan. That's known as the 457B exception. Here we go. I found that page here. Let me send this page over. Okay, I just sent that link over. All right, so let's see what other questions we have here. We're coming to the end of this morning's webinar. Again, we're going to have another one today at 1 p.m. Pacific time. Yeah, good question. That's $70,000. So yeah, when you contribute to the voluntary after-tax solo 401k plan, that's why they call it an after-tax contribution, because you don't get a tax deduction for it. But on the flip side, you get to convert it to the Roth solo 401k, and if you're young, or if you invest those Roth solo 401ks funds wisely, it's all going to grow tax-free. So you might be able to turn $70,000 into a few $100,000 over the course of your lifetime, or even more, depending on how well you invest that. I mean, imagine if you had invested that in NVIDIA a few years back before they catapulted to the moon. Probably be sitting pretty right now. But yes, you don't get a tax deduction for that $70,000 after-tax contribution. So, okay, it looks like Tim clarified here that the LLC is a sole proprietor. So that means that you're going to need to get a Schedule C from that LLC, a separate Schedule C. You got to pay yourself on a Schedule C. So separate from your wife's Schedule C. And then you're going to look at line 31 of that Schedule C. That's the starting figure for the calculation. So you would plug that line 31 Schedule C to our online calculator, and that would do the calculation for you regarding how much you can contribute. So here's a link to our contribution calculator. You'll be able to plug that line 31 to our calculator. The contribution calculator will reduce that line 31 from your Schedule C, which is the net profit, net loss line. Obviously, it's got to be a positive figure. You would plug that onto our calculator. Our calculator will deduct 1/2 of self-employment income tax, and then it'll break down how much you can contribute. All right. Well, thank you for joining today's webinar. It's been great. We're going to have another one here at 1 p.m. Pacific time. Until then, have a good rest of the day.